The Book Essence Podcast, Ep.20, Digital Gold, Part 3.
All right, deep divers, welcome back for part 3 of our Bitcoin saga. And, we've covered a lot of ground already in the first 2 parts, everything from those, mysterious origins to the early struggles for adoption.
Yeah, it's been a fascinating journey so far, seeing how this, revolutionary technology emerged from those fringes of the internet and started to challenge the very notion of what money is and how it works.
But as Bitcoin gained traction, things got, well, a little messy to say the least, so buckle up. Because today we're diving into some of the most dramatic chapters in Bitcoin's history, the conflicts, the forks, and the roller coaster ride toward mainstream acceptance.
It's a story that really highlights the challenges of building a decentralized system, the power of these, passionate communities, and the constant evolution of technology in this space.
Okay, so let's unpack this, and I think a good place to start is with what's often referred to as the Bitcoin Civil War. By 2015, Bitcoin was facing a bit of an identity crisis, or at least that's how some people saw it.
Yeah, it's fascinating how its growing popularity actually revealed some of its limitations, right? The system that was, designed for a relatively small niche community was starting to struggle to keep up with its own success.
Right, because back then, the amount of data that could be processed in each block of transactions was limited. I mean, we're talking about the infamous 1 MB block size limit.
Yeah, think of it like a highway with a fixed number of lanes. So as more cars, or in this case transactions, try to squeeze onto that road, things start to get congested, transactions slow down, and fees start to rise.
So imagine trying to buy a pizza with Bitcoin, but having to wait hours for the transaction to go through, and then on top of that paying, a hefty fee. Not exactly ideal for everyday use, is it?
Exactly. And this is where the community really started to fracture into 2 camps with very different visions for Bitcoin's future, the big blockers and the small blockers.
It sounds like something straight out of a comic book.
Yeah.
Tell me more about these factions and what they stood for.
Well, the big blockers figures like Gavin Andresen, who, had essentially taken the reins from the elusive Satoshi Nakamoto and developer Mike Hearn. They argued that the solution was simple, just increase the block size.
So make those highway lanes wider to accommodate more traffic makes sense.
Right. They believed this was crucial for Bitcoin to compete with the likes of Visa and PayPal. It had to be fast, convenient, and able to handle a large volume of transactions if it was going to achieve its potential.
So they saw Bitcoin as a potential replacement for everyday payments, a true peer-to-peer electronic cash system, as Satoshi had envisioned it.
Precisely on the other side, you had the small blockers, often associated with the Bitcoin core developers, the group responsible for, maintaining and evolving the Bitcoin software.
And they weren't keen on simply expanding the block size. Why not?
Well, they argued that doing so would compromise Bitcoin's core principles, particularly decentralization. They worried that larger blocks would make it more difficult for individuals to run full nodes, those computers that verify and secure the network.
Because if only a handful of powerful entities could run nodes, wouldn't that make Bitcoin more vulnerable to manipulation or control?
Exactly. They believed that keeping the block size small was essential for preserving Bitcoin's decentralized nature, even if it meant sacrificing some speed and capacity in the short term.
So it was a classic clash of values. Big blockers, prioritizing scalability and mainstream adoption. Small blockers, championing decentralization and security, above all else. What happened next? Did these 2 sides manage to find some middle ground?
Unfortunately, no. This civil war got pretty heated. Online forums like Reddit became battlegrounds for these debates, and there were even accusations of censorship and suppression of dissenting voices.
It sounds like it was a tense time to be involved in the Bitcoin community.
It definitely was, and this clash of ideologies ultimately led to the first major rebellion in Bitcoin's history, the rise of Bitcoin XT.
A rebellion. Tell me more about that. What was Bitcoin XT all about?
Bitcoin XT was essentially a software modification proposed by the big blockers, a fork in the road, if you will. It aimed to implement an 8 MB block size increase, a pretty significant jump from that 1 MB limit.
So a bold move to force the issue and push for faster adoption. What was the outcome? Did the Bitcoin community embrace this change?
Not quite. The Bitcoin XT rebellion ultimately failed. The Bitcoin core developers pushed back hard, labeling it a hostile takeover, and the majority of the community seemed to side with them.
So the guardians of the original vision prevailed. What does this tell us about the dynamics of the Bitcoin community at the time?
I think it highlights the significant power and influence held by those Bitcoin core developers. They held the keys to the kingdom, so to speak, and they were fiercely protective of what they saw as Bitcoin's fundamental principles.
Yeah, it also shows how passionately people felt about this technology and its potential. I mean, it wasn't just about lines of code, it was about a vision for the future of finance.
Exactly. And while the Bitcoin XT rebellion may have failed, that block size debate was far from over. In fact, it was just the first rumble of a much larger earthquake that would shake the foundations of Bitcoin and lead to the birth of Bitcoin Cash.
A fork in the road, literally. And that's where we'll pick up in the next part of our deep dive. Stick around as we unravel how this dramatic split unfolded and the lasting impact it had on the crypto landscape.
It's a story that shows how, even in the decentralized world, conflicts and compromises can shape the course of innovation.
See you next time, deep divers.
Bye for now.
Welcome back, deep divers. So, as we were just discussing that Bitcoin XT rebellion, it may have fizzled out, but the pressure surrounding that block size issue wasn't going away.
Yeah, the inability to find a real compromise within the community just meant that the tension continued to mount. The system was clearly struggling to handle the growing demand.
So as Bitcoin gained even more popularity, I mean, those limitations of that wannabe block size, they became pretty glaringly obvious. This is 2017, right? The year Bitcoin really started to make headlines.
Exactly. It's a period where, the very idea of cryptocurrency started entering the public consciousness, but the underlying technology was still being tested and pushed to its limits.
So paint a picture for me. What was it actually like using Bitcoin during this time?
Well, picture this. You're trying to buy something with Bitcoin, maybe a cup of coffee, but you're faced with these excruciatingly slow transaction speeds.
And I'm guessing those transaction fees weren't exactly pocket change either.
No, not at all. They skyrocketed, making Bitcoin impractical for those, smaller everyday transactions. It was initially designed it was a frustrating experience for a lot of users, and it became a major talking point for the Bitcoin Cash proponents.
So this is where figures like Roger Ver's, often called Bitcoin Jesus, and Jihan Wu, the CEO of that mining giant Bitmain, they really stepped into the spotlight.
Yes, they were really leading the charge for Bitcoin Cash, arguing that Bitcoin was, straying from its original purpose as this peer-to-peer electronic cash. They believed that bigger blocks were the solution, while the core developers continued to advocate for these alternative solutions, like the Lightning Network.
Okay, hold on. Lightning Network, you've mentioned this a couple of times now. Can you break that down for me and for our listeners who might not be familiar with it?
Sure, the Lightning Network, you can imagine it as a kind of parallel highway system built on top of the main Bitcoin blockchain. It allows for much faster and cheaper transactions by moving them off-chain, meaning they don't need to be recorded on the main blockchain immediately.
So it's like taking a shortcut to bypass the congested highway we were talking about earlier.
Exactly. But, this was a complex solution still under development, and it wasn't, a silver bullet for all of Bitcoin's problems.
So back to that showdown, Bitcoin Cash versus Bitcoin Core. Two very different paths for Bitcoin, each with its own set of trade-offs.
It was a fundamental disagreement about Bitcoin's very essence. What was its primary purpose? Was it meant to be a digital store of value like gold, or was it about revolutionizing everyday payments?
These were philosophical differences, not just technical disagreements. It seems like a compromise was becoming increasingly difficult.
And you're right. Neither side was willing to concede, and the community remained, deeply divided.
So tell me what happened. Did this conflict ever reach a breaking point?
It did, and this is where things get really interesting. On August 1st, 2017, Bitcoin experienced its first major fork, splitting into two distinct cryptocurrencies: Bitcoin, which retained the ticker symbol BTC, and Bitcoin Cash, or BCH.
A fork in the road. Literally. So what actually happened during this fork? Did people who own Bitcoin suddenly have two different kinds of coins?
Exactly. It was like a digital cell division. Anyone holding Bitcoin at the time of the fork received an equal amount of Bitcoin Cash. Imagine waking up one morning and finding that your Bitcoin holdings had magically doubled, but you now had two different assets with different values and different futures.
It must have been a confusing time trying to understand what it all meant. What were the key differences between these two branches of Bitcoin? What set BPC and BCH apart?
Well, the most significant difference, of course, was the block size Bitcoin, or BTC, stuck with that one belly B limit, though it later implemented a scaling solution called SegWit, which improved efficiency without actually increasing the block size.
So it's a more conservative approach, prioritizing security and that the digital gold narrative we talked about.
Right. Bitcoin Cash, on the other hand, immediately increased the block size to 8 millime, aiming for those faster and cheaper transactions that its proponents had been championing.
So they went their separate ways, each pursuing its own vision for Bitcoin. But let's be honest, Bitcoin Cash never really managed to dethrone Bitcoin, did it?
It's true that Bitcoin Cash, while gaining some initial traction, didn't quite achieve the same level of adoption or market value as Bitcoin BTC, remained the dominant cryptocurrency, attracting more developers and wider usage.
In this fork, it led to a pretty intense rivalry between the two camps, didn't it? Almost like siblings competing for attention.
Absolutely. You had these passionate communities on either side, each convinced that their version of Bitcoin was the true heir to the throne. It also led to further fragmentation as the Bitcoin Cash community itself later experienced another split, resulting in the creation of Bitcoin SV.
A family feud within a family feud. It sounds like a soap opera. But amidst all this internal drama, something else was brewing outside the crypto bubble.
You're right. While the Bitcoin community was grappling with these conflicts, something fascinating was happening in the world of traditional finance. Wall Street was starting to take notice.
Okay, hold that thought. This is where things get really interesting. We're about to see how Bitcoin's story intersects with the world of big banks and institutions. Stay with us as we uncover how Wall Street reacted to this volatile and disruptive technology in the final part of our Bitcoin deep dive. Welcome back, deep divers. We left off with Bitcoin experiencing that first major fork, giving birth to Bitcoin Cash and Wall Street, just starting to kind of peek into the world of crypto. What a whirlwind.
Yeah, it's quite a juxtaposition, isn't it? While the Bitcoin community was navigating these internal conflicts and ideological divides, you had institutional investors, these giants of traditional finance. They were beginning to see Bitcoin in a whole new light.
Yeah, it's almost like two separate worlds colliding. So
Yeah.
what was it about Bitcoin that caught the attention of these Wall Street titans?
I think it was a combination of factors. Bitcoin's resilience, despite those challenges we discussed, its growing adoption worldwide and its potential as a hedge against inflation and economic uncertainty, all these things were starting to, pique their interest.
So they were starting to see Bitcoin not just as a speculative asset, but as a potential store of value.
Yeah.
A digital version of gold, maybe?
Precisely, and this shift in perception was fueled in part by some key developments in 2017, the launch of Bitcoin futures on the Chicago Mercantile Exchange, or CME. That was a major milestone.
Okay, break that down for me. Why was the launch of Bitcoin futures such a big deal?
Well, before futures, institutional investors had limited ways to gain exposure to Bitcoin. They were hesitant to dive into this unregulated and often volatile market.
So futures contracts provided a way for them to participate in the Bitcoin market. But within a familiar, regulated environment, it was kind of like a bridge between the old world of finance and the new world of crypto.
Exactly. And this move by the CME, a giant in the world of traditional finance, it signaled this growing acceptance of Bitcoin as a legitimate asset class.
It's like Wall Street was giving crypto its official stamp of approval.
In a way, yes, but it's important to remember that this period, late 2017, was also the peak of that infamous Bitcoin bubble.
Right, that's when Bitcoin's price went absolutely ballistic, soaring to almost $20,000. It felt like everyone and their grandma was trying to buy Bitcoin.
It was a classic speculative frenzy fueled by media hype, fear of missing out, and the emergence of those initial coin offerings or ICOs. Remember those?
Vaguely, it was like the dot-com bubble all over again,
Okay.
but with digital tokens instead of internet stocks.
Exactly. Startups were raising millions, sometimes billions of dollars by issuing their own tokens, often with little more than a white paper, and a promise to revolutionize, well, pretty much everything.
It sounds like a recipe for disaster, was it?
In many ways, yes. Many of these ICOs turned out to be, poorly conceived ventures. Some were outright scams. And the bubble eventually burst, as bubbles tend to do.
So what happened? Did Bitcoin crash and burn?
It did crash, that's for sure. In early 2018, the price of Bitcoin plummeted, wiping out billions of dollars in value. It was a painful time for many investors, particularly those who had jumped on the bandwagon late in the game.
Ouch. I bet the media had a field day with that.
Absolutely. Headlines screamed about the death of Bitcoin, the bursting of the bubble, and the folly of investing in this, volatile and unregulated asset.
So Bitcoin went from hero to zero practically overnight. It must have felt like the end of the road for this revolutionary technology.
It certainly felt that way for some. The period from 2018 to 2019 is often referred to as the crypto winter. It was a time of reckoning for the entire industry. Prices crashed. Investors lost money and the hype faded away.
But amidst the wreckage, there were still those who believed in Bitcoin's long-term potential,
Right.
right? The true believers, the HO dealers as they're often called.
Absolutely. These were the individuals and groups who understood Bitcoin's fundamental value proposition, its potential to disrupt the financial system. They saw this downturn as a natural part of the cycle, a shakeout that would weed out the weak hands and strengthen the core community.
So they held on to their Bitcoin, weathering the storm, and maybe even buying more during the dip.
Exactly. And it's important to note that during this crypto winter, the developers didn't just abandon ship. They continued to work tirelessly improving the technology, addressing those scaling issues, and laying the groundwork for the next wave of adoption.
It's like they were quietly building the foundation while the storm raged above them.
A great analogy, and this dedication paid off by mid-2019. Signs of a thaw began to emerge. Bitcoin's price started to climb again, and this time the interest wasn't just coming from retail investors and speculators.
Institutional investors were coming back to the table, but maybe with a more measured and informed approach this time.
Exactly. They had learned from the mistakes of 2017, and they were starting to see Bitcoin as a legitimate asset class, a potential hedge against inflation, especially with governments around the world printing money at unprecedented rates.
So Bitcoin's narrative was evolving from get-rich-quick scheme to safe haven asset.
Yes, and this shift was bolstered by the development of more robust infrastructure. Companies like Fidelity and Coinbase were creating institutional-grade custody solutions, making it easier and safer for large investors to hold Bitcoin.
So the playing field was becoming more level, and the barriers to entry for institutional investors were coming down.
Exactly, and then we saw some really groundbreaking moves. Publicly traded companies like MicroStrategy and Tesla started adding Bitcoin to their balance sheets. These weren't small speculative investments. They were significant allocations signaling a growing belief in Bitcoin's long-term value.
Those were watershed moments.
It's
Like corporate America was giving Bitcoin its seal of approval.
They were, and it had a ripple effect throughout the market. More and more companies started exploring Bitcoin, and the idea of it becoming a mainstream asset, a part of a diversified portfolio, was no longer a fringe concept.
Wow, what a journey from a cypherpunk experiment to the brink of collapse and back again. Bitcoin has certainly had its share of twists and turns.
It's a testament to its resilience and its potential to disrupt the financial system. And while the future of Bitcoin is still being written, one thing is clear: it has fundamentally changed the way we think about money and finance.
Yeah, it's a story that's both fascinating and cautionary. It highlights the incredible power of innovation, but also the importance of understanding the risks involved.
And I think that's a key takeaway for our listeners. The world of Bitcoin and cryptocurrencies is complex and constantly evolving. It's essential to do your research, understand the technology, and be aware of the risks before diving in.
So keep those thinking caps on, deep divers, and continue exploring. The world of Bitcoin is vast, and there's always more to discover.
Until next time, keep learning, keep questioning, and keep diving deep.
And that brings us to the end of our 3-part Bitcoin deep dive. We hope you've enjoyed this wild ride through the history of this revolutionary technology.
It's been a pleasure sharing these insights with you, and we encourage you to continue exploring this fascinating world.
As always, thanks for joining us, deep divers, and we'll catch you in the next episode.
See you then.